The Indian Constitution empowers the Union government to impose some important domestic trade taxes. These include Union excise duty and tax on services. Union excise duty is an important source of revenue for the Union government. While the coverage of Union excise duty was expanded over time, its structure has undergone considerable changes since independence. The Union excise duty continued to be a first point cascade type tax on goods produced or manufactured since independence. Remarkable changes have been introduced since 1986. Apart from the levy of Union excise duty on manufactured commodities, the central government also levies a tax on services. Unlike the structure of Union excise duty, all taxable services are taxed at the same rate. Until 2002, service tax was a cascade type tax. There was no mechanism to allow for credit of tax paid on services used as input. For the first time in August 2002, credit of service tax paid on an input service was introduced, provided the input service and output service fell in the same category of taxable services. In this module, we will discuss about both Union excise duty and taxes on services in detail.
After studying this module, you shall be able to identify difference between Union excise duty, mod VAT and sen VAT, understand the structure and specific features of all different forms of Union excise duty, how each one is better than the other form of tax, understand reform process in UED, understand service tax and its coverage. The Indian Constitution empowers the Union government to impose some important domestic trade taxes. These include Union excise duty and tax on services. Power to levy and collect Union excise duty emanates from entry 84 of the Union List 7th schedule of the Constitution. Accordingly, goods produced or manufactured in India other than alcoholic liquors and narcotics, etc., those under state list, are taxable under Union excise duty.
The power to levy and collect Union excise duty emanates from entry 84 of the Union List, 7th schedule of the Constitution. Accordingly, goods produced or manufactured in India other than alcoholic liquors and narcotics, etc., that is, those under state list, are taxable under Union excise duty called UED. Initially, in 1870, UED was levied only on salt. In 1894, cotton yarn of fine counts was also included. Gradually, the base was expanded, and at the time of independence, its base was extended to about a dozen commodities. Over time, the coverage was expanded, and by 1974-75, 124 groups of commodities were covered under UED. A major step was taken in 1975-76 when a residuary entry relating to goods not elsewhere specified was included, and all commodities except those under the state list were brought under the purview of the Union excise duty. Entry 84 reads as follows. 84. Duties of excise on tobacco and other goods manufactured or produced in India except A. Alcoholic liquors for human consumption, B. Opium, Indian hemp and other narcotic drugs and narcotics, but including medicinal and toilet preparations containing alcohol or any substance included in subparagraph B of this entry.
Union excise duty is an important source of revenue for the Union government. The yield from this tax was Rs 28,109.8 crore in 1991-92. It contributed 41.7% to the total tax revenue of the Union government. The revenue has increased to Rs 90,774 crore in 2003-04 and further to Rs 1,71,996 crore in 2012-13. Although the total revenue from Union excise duty has shown a positive trend over the years, with a growth rate of 8.74% and buoyancy of 0.66, its share in total tax revenue of the Union government has almost halved from 34.45% in 1997-98 to 16% in 2012-13.
Union government has almost halved from 34.45% in 1997-98 to 16% in 2012-13. This is due to changes in the rate of structure and introduction of input credit under UED. Structural changes in the economy and growth in the revenue from other taxes such as corporate and personal income tax and custom duty. While the coverage of UED was expanded over time, its structure has undergone considerable changes since independence. The UED continued to be a first point cascade type tax on goods produced or manufactured since independence. Remarkable changes have been introduced since 1986.
The Indirect Taxes Inquiry Committee, Jha Committee 1978, suggested moving towards a system of value-added tax at the manufacturing level, MAN-VAT. Based on the recommendation of the committee, steps were taken to introduce VAT in 1986 in the form of Modified Value-Added Tax, MOD-VAT. This scheme allowed rebate on tax paid on purchase of inputs. The MOD-VAT scheme was an attempt to introduce the principles of VAT in UED.
The MOD-VAT scheme was an attempt to introduce the principles of VAT in UED. It was, however, different from the VAT system in many respects. First, the coverage was limited to goods which were generating approximately half of the revenue. Second, there were some special provisions under MOD-VAT, namely notional credit and deemed credit. Under the notional credit, a manufacturer who purchased inputs from small scale units was allowed to take credit of an amount higher by 10% ad valorem than the actually paid on inputs. Whereas under deemed credit, a manufacturer could take MOD-VAT credit at a specified rate for certain inputs without production of documentary proof of payments of duty on inputs. Third, the MODVAT was restricted in scope. MODVAT credit could be availed provided the inputs and the final products both were covered under MODVAT scheme and the final products were not exempted from excise duty. Thus, the MODVAT was only a step closer to VAT.
Now let us discuss the difference between mod VAT and VAT. The coverage was limited to goods which were generating approximately half of the revenue. There were some special provisions under mod VAT, namely notional credit and deemed credit. The mod VAT was restricted in scope. Mod VAT credit could be availed provided 1. The inputs and the final products both were covered under mod VAT scheme, and 2. The final products were not exempted from excise duty. Thus, the mod VAT was only a step closer to VAT. The Tax Reforms Committee, known as Chalia Committee, made the following important recommendations: introduction of three basic excise rates of 10, 15, and 20% on non-essential commodities. Higher rate of excise duty at 30, 40, or 50% may be charged. Excise duty should be levied on certain exempted commodities and a duty of 10% be imposed on these items. The simplified assessment procedure should be introduced for small scale units whose turnover did not exceed Rs 30 lakh. A nominal duty of 2% beyond Rs 15 lakh was also recommended for units in tiny sector to bring them into the tax net. Rates of duties should be switched over from specific to ad valorem except when it was not feasible for administrative reasons. Based on the recommendations of the Kelkar and TRC committees, rate structure was gradually rationalized and exemptions were curtailed. As a result, in 1995-96, the excise duty rate structure comprised of 11 ad valorem rates ranging from 0 to 50%. The composition of 4 rate duty structure are: 0 rate on essential or sensitive items, a lower rate for goods of mass consumption, a single normal rate on all other goods, and a higher rate for luxury items.
Considerable reforms in the excise duty structure were introduced from 1991-92 based on the recommendations of TRC, that is Chalaya Committee. The rates were rationalized, exemptions were curtailed, and the rates were broadly designed on the basis of harmonized system of nomenclature, that is HSN. In 2001, SEN-VAT replaced MOD-VAT. In 2002, a further boost was given to the reforms in UED through the report on the Task Force on Indirect Taxes 2002, popularly known as Kelkar Committee. Further reforms in the structure of SEN-VAT and its administration were introduced on the basis of this report.
Various reforms have been made in rate structure in the last decade. In the budget 2000-2001, the rates were converged to three ad valorem rates, that is 8%, 16%, and 24%. In 2001-2, while the SEN-VAT rate of 16% was maintained, the two rates of special excise duties were compressed into a single rate of 16% SEN-VAT. However, the special excise duty rates were increased from 2 to 3 rates, viz. 8%, 16%, 24%. The standard rate of SEN-VAT was reduced as a part of the stimulus package to induce demand to 10% and further to 8% ad valorem. The SEN-VAT standard rate was again reversed to 10% to bring it at par with the service tax rate in 2010-11. While the standard rate of UED remained the same, the lower rate was increased from 4 to 5% in 2011-12. The Union Budget of 2012-13 has revised the standard rate upwards from 10% to 12%, and again in vote on account of February 2014, it was reduced to 10%. There are some variants of UED that have emerged from time to time to fulfill certain objectives. They are: 1. Additional duty on motor spirit, petrol. 2. Special additional excise duty on motor spirit, petrol. 3. High speed diesel oil. 4. Additional duty on HSD. 5. National calamity contingent duty. 6. Additional duty of excise on pan masala and certain tobacco products. 7. Education cess and the secondary and higher education cess. The excise duty structure is replete with exemptions of different kinds. They are: 1. Exemption for small scale industries. The exemption is applicable for the manufacture of goods on clearances up to Rs 1.5 crore in a financial year. 2. Area-based exemptions. The scheme of area-based exemptions was introduced for the first time in 1999 for notified areas of the Northeast. The scheme was made applicable to specific commodities produced in specified areas and was intended to encourage investment in the Northeast. 3. Other exemptions. In addition to the above, exemptions have also been provided to health sector and certain specific goods.
The structure of exemptions has varied and not remained uniform for all the concerned states. The exemption was also provided to specified goods manufactured by an eligible unit in the specified state and or located in a specified industrial growth center, industrial infrastructure development center, or export promotion industrial park or industrial estate.
The existing structure of UED is characterized by the following weaknesses. 1. Multiplicity of duties. There are different kinds of excise duties that are levied and collected by the central government, and such different types of excise duties make the tax structure complex. 2. Numerous rates of SENVAT. While the standard rate is 10%, several commodities are charged excise duty at different rates. 3. Special levy on pan masala and pan masala containing tobacco. Manufacturers of pan masala, including pan masala containing tobacco, pay excise duty at the notified rate applied to the number of machines installed in the factory of production. The duty is payable irrespective of the actual production. 4. Plethora of exemptions. With implementation of the area-based exemptions, a serious dent on the revenue from excise duties made industries in the adjoining state non-competitive.
Reforms in UEDs started in 1986 based on the recommendations of the Indirect Taxation Inquiry Committee. With introduction of MODVAT levied at the manufacturing stage with the provision of credit of excise paid on their purchase of inputs. With the introduction of various reforms in the UED on the basis of recommendations of various committees, the current system of taxing commodities has become quite efficient. It could be made more vibrant and effective by reviewing the exemptions. The area-based exemptions are alien to an ideal VAT regime. In addition, these exemptions will create problems in GST regime in future. Also, SSI exemptions limits need to be reduced. This is much higher than the threshold for small dealers under state VAT.
Union government, using the powers from the residuary entry in the Union list, levied this tax with effect from July 1, 1994. Initially, this tax was levied on three services, viz., general insurance, telephone service, and service provided by stockbrokers at the rate of 5%. The report of the advisory group set up by the Planning Commission recommended that the central government should allow the states to levy tax on all services other than financial services, including all insurance services, telecommunication, postal telecommunication, and transportation of goods and passengers by air, sea, and rail. Based on the recommendation of all these committees and keeping in view the introduction of GST, a major step has been taken by the government to introduce tax on all services except those given in the negative list. Accordingly, all services are taxed at the rate of 10%.
The tax on services in India was first introduced based on the interim report of the Tax Reforms Committee 1991 called Chalaiya Committee. Later, several expert groups and committees contributed to the extension of this tax. Specifically, the report of the expert group on services and the report of the Fiscal Responsibility and Budget Management Act recommended a general and comprehensive tax to cover all services with a small and clearly defined exemption list. The group identified services that could be put in the negative list and the services that deserve to be exempted from levy of service tax. The group also favored eventual integration of SEN-VAT with service tax, both goods and services being charged at a uniform rate.
Commencing the levy of this tax in 1994-95 to mop up resources, the yield from service tax has been increasing year after year. Its yield has increased from a paltry sum of Rs 407 crore in 1994-95 to Rs 3,302 crore in 2001-2 and to Rs 97,508 crore in 2011-12, exhibiting a growth rate of 38.7% per annum during the period 1994-95 to 2011-12. This has resulted in an increase in the share of service tax revenue in the gross tax revenue of the centre from 0.44% in 1994-95 to 1.77% in 2001-2 and to 10.96% in 2011-12. Service tax revenue as a percentage of GDP has also shown an upward trend. It has gone up from 0.04% in 1994-95 to 0.12% in 2000-2001 and to 0.9% in 2009-10. Now, unlike UEDs, all taxable services are taxed at the same rate. At the time of service tax introduction, that is, in 1994, the tax was levied on these services at a modest rate of 5%. Gradually, the tax rate was increased to 12%. However, the rate of service tax was reduced currently to 10%. Until 2002, service tax was a casket type tax. There was no mechanism to allow for credit of tax paid on services used as input. For the first time, in August 2002, credit of service tax paid on an input service was introduced. However, a substantial liberalization in the credit scheme was introduced in September 2004. The SEN-VAT credit scheme and service tax credit schemes were merged into one scheme. The SEN-VAT credit rules 2004 thus provided for credit of the tax paid on input services used in providing output services or when used for the manufacture of excisable goods.
The definition of input service is wide enough and includes services used in relation to business such as accounting, financing, modernization of factories, etc. Taxation on import of services was introduced in 2006. The taxation of services from its inception followed a system of taxing a few select services notified under the law. All other services were exempt. Since 2012, this system was changed to a system of negative list. That is, all services would be taxed except those in the negative list.
Let us now focus on the importance of negative list in taxing of services. Since 2012, the taxing of services system was changed to a system of negative list, that is, all services would be taxed except those in the negative list. The negative list, as of today, comprises 38 heads keeping in view the federal nature of Indian polity and socio-economic requirements. Let us now discuss the negative list. The important inclusions in the negative list are all the services provided by state government or local authorities, except a few specified services where they compete with the private sector. The list also includes schools, higher level and vocational education, entertainment and amusement services, and a large part of public transportation, including inland waterways, urban railways. All services related to agriculture and animal husbandry are included in the list. In addition to negative list, a list of exemptions of 10 services is included by way of the service tax law. These include healthcare services, services provided for charities, religious persons, sports persons, performing artists in folk and classical arts, individual advocates providing services to non-business entities, independent journalists, and services by way of animal care or car parking. The services of business facilitators and correspondents to banks and insurance companies are also included in the exempted list. The cinema industry is exempted from service tax on copyrights relating to recording of cinematographic films.
Let us now recapitulate what we have studied in this module. The central government imposes some important domestic trade taxes that include union excise duty and service. Union excise duty is levied on commodity if it is produced or manufactured. Union government levied excise duty on all commodities other than alcoholic liquors and narcotics. For the first time, reforms in UED were introduced in 1986 on the basis of the Indirect Taxes Inquiry Committee, called the Jha Committee, in 1978 through the introduction of MODVAT. Reforms in the excise duty structure were carried further in 1991-92 based on the Chalaiya Committee, called TRC. Successively, rates were reduced and also specific rates were switched over to ad valorem rates in most cases. In 1995-96, the excise duty rates were reduced to 11 ad valorem rates ranging from 0 to 50%. In the budget 2000-2001, the rates were converged to 3 ad valorem rates, that is 8%, 16% and 20%. In 2001, SENVAT was introduced to replace MODVAT based on the recommendations of Chilaiya Committee. The SENVAT standard rate was reduced to 10% to bring it at par with the service tax rate. There are different forms of excise duties levied and collected by the union government. These are the basic excise duty, additional duty on motor spirit, that is petrol, special additional excise duty on motor spirit, and high speed diesel oil called HSD. Additional duty on HSD, national calamity, contingent duty and other customs duty, and additional duty of excise like pan masala and certain tobacco products. There are some exemptions under excise duty structure. The main exemptions relate to small scale industries and to backward areas. The union government also levies a tax on services except a few specified services which are assigned to states. For example, entertainment tax, passenger and goods tax and electricity duty. In 1994, drawing the powers from concurrent list, the union government initially levied service tax on 3 services, viz. General insurance, telephone service and service provided by the stockbrokers at the rate of 5%. The current service tax is 10%. The definition of input service is wide enough to include services used in relation to businesses such as accounting, financing, modernization of factories, etc. Taxation on import of services was introduced in 2005-06. Since 2012, taxation of services was based on a negative list. That is, all services would be taxed except those in the negative list. In addition to the negative list, a list of exemptions of 10 services is included. These include healthcare services, charity services, religious persons, sports persons, performing artists in folk and classical arts, individual advocate services to non-business entities, independent journalists, and services by way of animal care or car parking.